today, we're in a moment where the banks are doing well. We're not starting out with interest rates of zero. Interest rates are going down. The balance sheets are not great in banking, but for the U.S., it's lower than it has been. So, in other words, the official sector has a lot of tools it could use to remedy a bad economy, to work on it. Doesn't mean it'll be instantaneous, but there are a lot of tools that could be put into service. And the banks themselves are in much better shape. So I'm not saying that there won't be problems, but the problems will not cascade and snowball into a bigger problem is what I think.
So you don't see anything systemic?
I don't see anything systemic. But, by the way, I didn't necessarily see anything systemic in the run-up to the crisis, which is why that's the nature of bubbles. Yeah. Everybody sees it in hindsight, but no one sees it in prospect.
Lloyd, how successful have financial markets been in reining in Trump's wilder impulses?
Well, I think I don't think we're reining in. I mean, look, a lot of the stuff that just betraying certain attitudes here, I think some of the actual outcomes and specific policies are quite defensible. It doesn't mean that everybody's liking it, but he's addressing some things that need to be addressed. And then on the other side, he's also, let's say, challenging some norms and traditions and some safeguards and guardrails that that some people include that I even find some alarming from time to time. And so it's a bit of a balancing act. But I think sometimes some of the inconsistencies and media kinds of statements that go out. What's the cliche that's emerged? You take it. You don't take it literally, but you take it seriously.
Okay, and this is for everything that's happened in the price of oil or also tariffs and trade?
Well, things can spiral out of someone's control. I mean, you have something, it's not as if, you can have, somebody can only convey his intentions, and you could decide whether you believe it, and that's really where he's coming from, because maybe there's some inconsistencies. But then there's another level. What if you absolutely knew intentions, but you lose the ability to control these things? You can't manufacture more supply of energy with your intentions. So, things can get out of control. And so, look, one thing when you compare crises and going back, we're in one that's unresolved. So it could get worse. And so, and by the way, this is the one we're in. So it's worse and it's scarier in terms of our attitude and our minds. But if we went back to the same place at the same time at the global financial crisis, that was much worse. But it's hard to be scared of something that's resolved on the shelf in a can, can't hurt you anymore, it's not going to get worse, you're just reading about it. And so we're living with something that you are not just marking yourself to market and how bad is it today, but we automatically extrapolate to where it could go. So we'll get through this also. Look, I joked, I said, that we had the crisis of the century every 4 or 5 years. Whether it was the long-term capital, the dot-com bubble, the Asian currency crisis. We haven't had one in a long time. By the way, that itself is a reason for concern. Because if you haven't had a crisis, it means you haven't had a reckoning. You haven't had a sell in distress, things that have accumulated on your balance sheet that might not be marked correctly. And the more time, the analogy I like to give is you accumulate tinder on the floor of the forest, and eventually a spark will come. But the longer between intervals where there's a spark that sets it on fire, the more that accumulates. We're coming off a period where we had the highest equity markets we've ever had and a very, very favorable financing market. Yet a lot of private equity firms have accumulated a lot of inventory of deals that they've gone into, been on their balance sheet. They're highly incented to sell them, but they haven't been sold. If they haven't been sold in a good equity environment and a good financing environment, how easy it's going to be to sell them. And so why not? Maybe they're marked higher than what you could get in the market. So at some point, there needs to be a forcing function or a reckoning that causes you to come to grips with what your balance sheet really is worth.
But what's the hardest leadership lesson that you've learned that we can apply now? And you talk about this a little bit in the book. Is there, if you know that there's going to be a spark, should chief executives look for the sparks before they're ignited?
Yes, but really, really, I would say look for the kindling, because eventually there will always be a spark. And by the way, a spark that occurs when there's a lot of flammable material on the floor will set it ablaze, but if the material wasn't there, the spark would just happen and go by. It'll be something that in a different moment you might not have noticed, but it'll be, not to mix a metaphor, the last straw.